US markets closed higher overnight, snapping the 5-day losing streak they were on, as investors looked towards development out of Washington and economic news releases. Stocks initially rose after Reuters reported that the senior Republican Jeff Sessions said that there will be no shutdown or government defaults. House Speaker John Boehner also added to the mix, saying a Republican proposal is coming that will tie federal government spending cuts to a US debt limit increase. Most analysts are expecting another last-minute deal to be reached. However, the debt ceiling must be extended until later in October to allow for the Treasury to continue to repay its debt by borrowing more money. Ironic, isn't it? On Wednesday, the Obama administration warned Congress that the Treasury was quickly running out of funds to pay government bills. In a letter to the House Speaker, Treasury Secretary Jack Lew said that the economy could run out of cash by October 17 if the borrowing limit isn't increased. In economic news, the government left its estimate for economic growth in the second quarter unchanged at 2.5%, and weekly jobless claims fell 5,000 last week. Pending home sales declined 1.6% in August, the third straight month of declines. In Europe, shares closed mixed yesterday, with Italy taking the spotlight after media reports on Thursday said the President Napolitano had cancelled a conference appearing to deal with a disturbing political development. It comes a day after Berlusconi urged his political allies to walk out from Parliament. Keep in mind the threats Berlusconi has made to bring down Parliament if he is removed from the political arena. France's Consumer Confidence Survey came in at expectations after the country had unveiled its 2014 budget yesterday. In the UK, the final reading for the second quarter growth came in unchanged at 0.7%. However, worse than expected current account deficit caused the sterling to fall against the US dollar. In Asian trade, the Nikkei produced a dramatic turnaround, reversing losses to close at a one-week high after falling over 1% to a one-week low earlier in the session, and then went on to outperform Asian equity markets. The turnaround was predominantly caused by the Kyodo News report that the government is urgently considering a reduction in corporate tax rates, which could offset any negative impact from the scheduled consumption tax hike on October the 1st. Shanghai, on the other hand, fell 2% to its lowest level since September 9 as investors took profit ahead of the free trade zone opening on Sunday. Coupled with this was the economic survey, China's Beige Book, which showed business conditions are worse than recent positive economic data suggests. Sydney rose 0.3% after erasing earlier losses in the session, with mining stocks rallying as copper prices broke a 3-day losing streak. Data from the Australian Bureau of Statistics showed labour demand had recovered slightly as job vacancies rose last quarter for the first time in a year. Analysts had expected a decline. The Kospi also tracked slightly higher, paring losses to close above 2,000 points, as foreign investment continued to buy for the 22nd session in a row now. Major news today includes Euro and US dollar. And there's quite a lot of medium impact news items also. Please check your economic calendar for more information. Have a great trading day.